Development of any industry is an integral part of the macroeconomy. So that is the case with P known as the industry vitamin. So for this event, we are very honored to have with us chief economist from CICC, who is also an MD of CICC, Mr. Zhang Wenlang. He's going to do the first keynote speech with the name Embracing New Era Global Macroeconomic Outlook. The floor is yours, Mr. Zhang. If my memory serves me right, I have half an hour to do the keynote speech. So in the next half an hour, I'm going to present to you how we see the global and China's macroeconomic outlook. For the domestic situation, I'm going to present first of all, the medium to longer term outlook, and then I'm going to talk about the next couple of months and next year's outlook. So the name of my presentation is Embracing Innovative Era. And here I would like to emphasize the fact that there are still a lot of highlights of economy in China, although we are seeing, or we are currently at the stage of stabilizing and gradually trending up. That's why I decided to call my presentation Embracing Innovative Era. So first of all, let me just give you the key takeaways from my presentation or the agenda. Firstly, I'm going to present to you how we see America and European economy will pan out in the next year or in the next couple of years. We still see a lot of pressure on both the European and the American economy. In other words, the uncertainties of the two economies are increasing mostly because inflation remains a dominant problem in both America and Europe, and it is hard for us to see any reversal of the tightened monetary cycle anytime soon. That's how we see it. And mostly, the two economies are facing high inflation, not because their economies are strong. On the contrary, however, mainly because of supply side issue or geopolitics, the two parts of the world are facing the problem of high inflation. So if they choose to tighten the monetary policy on the current situation, undoubtedly that will put additional downward pressure on the economy. That's why we are saying that uncertainties on the part of the United States and Europe keeps increasing. As for China, first of all, let's take a look at the situation for China in the medium to long run. As I said myself, that I decided to call the topic of my presentation Accelerating Innovative Era, and the growth engine is facing another grand shift since the beginning of this century. So in the past, we relied on the population, we relied on the real estate, but gradually we're shifting towards relying on technical innovation or technological innovation. So we're at the very early stage of this accelerated innovative era. That's the situation for China in the medium to long run. But in the short run, we have three focuses of attention. First focus of attention is the real estate, because real estate still levies or still has a huge impact on China this year. And the second area is export. Export in China remains strong currently. How do we see its resilience and how export will evolve in the future? What are the areas of attention that we should be mindful of, and where we see highlights? And thirdly, consumption. Consumption is integral to any economy. So in the short run, there are three areas of focus for us. And on the whole, currently, the economy is still at the stage of stabilizing in the midst of trending up, under the precondition that China's policy support continues to enhance. And China maintains a relatively loose or easy monetary policy, which is contrary to the United States, which features tightening monetary policy. On the other hand, China's fiscal policy are intensifying. That's why we're seeing that the Chinese economy is on the part of trending up in the midst of stabilization, and China's inflation is at a moderate level. That's basically our key messages that I want to deliver to you. So let's just take a look at the detailed situation in the United States. The slide showed you, as I was mentioned previously, the biggest problem concerning the United States and Europe is that they are facing huge inflationary pressure. As you can see, recently the United States, the CPI was 8.5% year on year, as opposed to 9.1% in June year on year. So if you take a look at this chart for America of the age of 40, they have never seen so high inflationary figures. They have never seen such high inflationary figures since the first day they were born. So the chart just speaks for itself. Why? Why is inflation in the United States so high, and how things will pan out going forward? As we know that the labor market in the United States is very strong. However, labor participation ratio has yet recovered. In other words, on the one hand, the United States is facing shortage of labor force, which is a very important reason for inflation that we're currently seeing in that country, because people stop participating in the labor market. As a result, the salary goes up correspondingly. As you can see, this is the spiraling up of the salary and inflation in the United States. On the other hand, the pricing power of companies in the United States are increasing, as you can see on the left-hand side of this slide, that shows the markup ratio of American companies representing a record high for decades, for over 6 decades, ever since 1959, when data was first captured. So that's why you see that CPI and PPI in the United States are both high. That's the current situation in the United States. On the one hand, the United States is facing high inflation. On the other hand, ever since the second half of last year, the monetary policy and the money policy in the United States have been tightened. So from the beginning of this year until now, the United States is still in the midst of tightened monetary cycle, and there is still a long way to go for the United States. So if you take a look at the GDP growth, the country faces fast decrease of GDP growth year on year. If you take a look at the first 2 quarters of this year, GDP growth declined quarter on quarter, albeit year-on-year growth remains positive. However, the GDP growth of the United States in the first 2 quarters on a quarter-to-quarter basis declined or reported negative growth. While things change, or while the situation be lifted going forward, we don't think that will be easy. Well, what do the 2 charts on this slide show to you or say to you? Let's just take a look at the situation on the part of the left-hand side as well as the right-hand side. You can see both the inflationary rate as well as the unemployment rate. So there are 2 scenarios on the part of the United States regarding their inflation. If you pursue low inflation, as is shown on the left-hand side of this chart, as is illustrated in the dotted line, well, that's not impossible, because the proper inflation rate for the United States, 2%. Currently, it stands at 9%. If you want to go from the current 9% to 2%, what will you do? You need to tighten monetary policy to a very extreme extent. If you tighten monetary policy very much, the inflation or the unemployment rate will be very high, because the economy will be very gloomy. On the other hand, there is another scenario. If you don't pursue lowering the inflation to the 2%, instead, they can accept 3 to 4% inflation. In other words, they will stop tightening monetary policy at a certain point in the future, and the unemployment rate will not be very low, nor will their situation be very gloomy. So this slide just presents to you 2 scenarios as distinguished by different inflationary targets that the United States might pursue. Which one is more likely on our view? How will you see the United States will make a decision in between the 2? Will it choose the low inflationary scenario or the higher inflation one? So if you pursue very low inflationary rate, then the GDP growth or GDP potential growth will be shown on the left-hand side of this chart. However, if you pursue moderate inflation, then the situation will be illustrated on the part of the right-hand side. We don't think it's very likely the United States will go to extreme or go to great lengths to lower the inflation rate to 2%. We think 3 to 4% are also acceptable to them, because for years or for decades, their inflationary rate have maintained at 2%. So it was a surprise to them that their inflationary rate have gone this high. So for them, the choice is between 2%, as was the case for the past decades, or on the other hand, they can choose to go with 3 to 4%. They have 2 choices, and which one will they take? So let's just take a look at this chart on this slide. The slide shows you the debt level of the governments on the part of the United States. So if you see the debt level of the United States government as is illustrated in the red line, well, do you see that the situation is that the current debt level of the U.S. government is even higher than the situation during the Second World War. Why? Because of the outbreak of COVID-19, the United States, in order to stabilize the economy, issued or launched a very aggressive stimulus incentives. As a result, they just printed money and they gave money to people. As a result, the debt level of the U.S. government is even higher than the situation in the Second World War. As a result, they have a high burden to pay back the debt, and they don't dare to raise the interest rate too high, otherwise they will face too much debt burden. So we don't think they will pursue extremely low inflationary rate, which is the case of 2%. We think that 3 to 4% will also be acceptable to them. However, the downward trend of the United States economy is already there. It's already a trend. The situation is not that bad this year. However, the low growth rate will appear or will manifest itself next year or the year behind next year. The situation in Europe is even worse than the situation in the United States for a very simple reason. That is, the Eurozone or Europe is under huge influence of geopolitics. As you can see, the electricity bill in Germany has gone up by a large margin. Take a look at what was the power price before the geopolitical influence and what is the level for now is about 1,000. So the power bill in Germany has gone up or has skyrocketed. As a result, for the Eurozone, their trade surplus has turned into trade deficit. Why? Because the imported goods are very expensive for them. So the result is that their trade surplus turned into trade deficit. That's why you see that the inflation in the Eurozone has reported a record high for a number of years.
Well, in such a context, we can clearly observe that in the Eurozone, the ECB has already initiated a cycle of rate hike. That is to say that Europe is growing at a slower rate than that of the US, but its inflation is higher than that of the US. What is the reason for that? Because they have spent a lot of money importing commodities, so they were forced into doing it. They ended up seeing a high inflation. The US is different from Europe in the sense that they have a labor shortage. So what's the special thing about labor shortage? Because if you have shortage of labor, you have to give a pay rise. As a result of that, consumers will have a higher salary. They will spend money to do the domestic consumption. So America is like a domestic consumption circulation. So pay rise, more consumption, and driving up inflation, and the economy wouldn't be too bad or lousy. So U.S. economy is driven by internal consumption. It's a internal circulation, but Europe is a different story because of a geopolitical landscape. So energy price is skyrocketing. They have to import a lot of the energy. They have to use money, spend money to buy it, to import it. So as a result of that, bringing their trade surplus into deficit. So the money is spent and others will take the money from the pocket of the Eurozones instead of the other way around. So U.S. is making some proactive initiatives to hike the rate, but Europe is forced into doing it. So you find that the national T-bond yield spread is widening between the U.S. and Europe. So think about the locomotive of Europe economy, which is Germany, right? But even given that, given a very doomy picture across Europe, across the board, that has affected the economy of Germany as well. So think about inflation, rate hike. There is a lot of concerns about the weak peripheral Euro economies. What about their economic situation? We worry about their debt and payment capabilities. We find that actually several years ago, there was a Euro debt crisis like peripheral countries, Greece, Italy, and Spain. Think about those countries. And also we find that in the year 2010, so they ran into that crisis. But now the debt level for those peripheral countries are higher than the level in 2010. So now the context has worsened and Europe had to find itself raising the interest rate. So a lot of concerns over its debt payment issue that will drive up its interest rate. So you'll find that drive up its yield. People will have to avoid it because unless you can have a higher bond yield or something, that's the situation for Europe. So on that note, as I mentioned before, this is a difference between US and Europe. There are a lot of uncertainties building up on the horizon. Okay, let's look at China. I'm going to talk about two different areas about China. One view is a short, medium term. Another view is a medium longer term view. So let's try to look at the medium longer view so that we know what are the future taking us to. But you have to talk about the medium issue in the context of long term. So when we talk about actually we are embracing the innovation era, that's the theme for example, the medium term or something. What is the medium longer term about 5 to 10 years down the road ahead? Or if you can extend your time horizon. When we talk about the medium and longer term, let's try to look at the past 2 decades and the next 1 decade, we call it 3 decades. So let's try to look at the first one. So the 1999 to 2008 and 2009 and 2018, and also the third 1 decade, 10 years post 2019. Let's look at the first decade. This is characterized by a demographic dividend here in China. So you find what is the demographic dividend? What does that mean? Because that rings a bell, but what does that mean? So the so-called demographic dividend means that a lot of a working population, by comparison, the non-working population is in the minority of the structure. So those working population are in their young ages, they are in their working age. So the non-working age are children and also after retirement senior citizens. If in the society demographic mix there are a lot more working class than non-working population, there will be a lot of surplus savings. So we call it a demographic dividend. So think about it. We have a lot of working population, a lot of people out there to make money for the economy. Fewer people are spending the money. So that's the country characterized by a demographic dividend. So it's characterized by a high savings rate. So what do you save the money for? So the saved money will become investment capital. You invest in something. Investment and savings are both very high. And also the people working in the production are very in big numbers. So a lot of less people and fewer people are making some consumption. So think about it. So when you have more than you can consume, the leftover or the surplus can be exported. So savings high, saved money can be used for investment, and also the surplus capacity can be used for exporting. That's the first 1 decade. The second decade is between 2009 to 2018. There is a shrinking of the demographic dividend until the year 2010, of which you find the growth of people working in their working age is shrinking. So post the year 2009 until 2018, we call the financial circle or cycle. It's not just like capital market. It's not a debt, a cyclicality or something, not equity, not debt. So we are talking about the home price reinforced with a credit cycle, and they are reinforcing each other in an upward spiral. Hereby, the real estate plays a very important role because it could be serviced as a mortgage or collateral. If you want to get bank loans, you need to put down your property. So because land is limited, property is important, construction materials are not important, but land is important. So when we talk about the home price is increasing because of scarcity of land. Why home in Shanghai is so much more expensive than those in the suburban areas, not because of the construction materials, because of the land is limited in downtown. So as the naturally scarce resource, so people will love to take property as a collateral to lend you the money, and then so the bank extend more loans, driving up home price, and home price is increasing. Banks are willing to extend loans, but what if there's a sudden standstill of the home price increase, and the banks are reluctant to extend loans, and then the price of home slows down? So it's kind of a spiral upward and then followed by the spiral downward move as well. So we call it a financial cycle. Behind this, between 2009 to 2018, think about the upward movement of the financial cycle. It's related to the expansion of credit release in the economy, and partly is also due to accelerated pace of urbanization from the areas to the city areas. So people are buying a lot of properties and homes, further driving up the home price. Last year, 2017, there was a tightening of the regulation over the real estate sector. So the upward spiral has been bended downward as well. So that's the second decade. So in the process of the second decade, after that is finished, and then we are into the third. This is about innovation as well. So post year 2019, this was an accelerated innovation period. In the past, you have to rely on the demographic dividend, but now you can't rely it anymore. And so in the past, you rely on the expansion of credit, bank loans, and property, but now you can't rely on that. You have to rely on the digital economy, green economy, and the bio economy. These are the three economies driving up the innovation. So the science and technology innovation cycle, that's why during the fourth five-year plan period, the national policy emphasized on innovation, because the past and all the locomotive and drivers for economy could no longer be depended on. So now we have to depend on innovation or something. These are the characteristics of the 3 decades. So I'll skip this part. Please refer to this one. This is the process of that. So the bar chart represents the demographic dividend, the newly released working population in surplus and declining into deficit, and also the red line represents the financial circle. So upward ever since the GFC and then downward. And the third one, dotted line, is the digital economy. So these are the 3 decades for China. Under such a context, when we talk about stabilization of economic growth, so in the past, we rely on the infrastructure, real estate. On the other hand side, we have to rely on something else. So new models, so the new innovation cycle in the 3rd decade. So you find that the property declined. Well, this has been complemented by green economy, digital economy, and other economies as well. So that can give you a very clear picture of what's the past business as usual way of developing our economy versus what are driving China's economy right now. So in the medium and longer term, it's called the era of embracing innovation. But over the short run, in the second half or into the next year, what about China's economy? How is it faring? Let's talk about 3 different areas. The first one is real estate. Think about real estate sector is volatile, is fluctuating. But we can mention that the real estate sector is characterized by one feature this year. So on the supply side, so the developer financing has been subject to very stringent regulation. It's not like that the households are stopped buying. So not all the households are buying, but it doesn't mean that everyone stops buying. So the demand is still there for home. Still is kind of elastic demand is there as well. So like upgrading consumption need or something, but it's quite divergent across different tiers. Cities, tier 3, tier 4, their demand is not that, for example, inelastic. But for tier 1, tier 4, no matter is a first home buyer or upgrade buyer, so they have a strong demand as well. But why is it still that it's weak, the real estate sector this year? It's because on the supply side, so the financing for developers is very tight. So that's why the home new starts and new sales both decline as well. But actually, as we are trying to make sure that the developers will deliver on time and also to ensure the supply, so it's warming up the industry. So it's bottoming out a little bit. Sectors export. Echoing the points I said before, at the onset of COVID-19, export used to be very robust. Why? Europe and America's economy was faring very poor back then, bringing the downward pressure for the global economy. Under general downward pressure in the global economy, if we can export more, this will drive up the economy, giving us less pressure. And third party is consumption, which is very weak this year. Why? So this is all the 3 points connected with each other. First one is a real estate sector. Please refer to this chart. So this is a like comparison between China, Japan, and the U.S. Try to look at their historical, the real estate cycle for volatility, and for the cycle for volatility for China. Let's fit them together. So think about the home new starts. The slope is very steep, like indicated by the red one. So that's in terms of floor area. So volume is one thing, pricing is quite another. So volume is volume, price is the price. So price is nominal, well, volume is effective, right? So the new construction, new starts, actually the slope is very steep. What about the sold areas? The areas sold in terms this year, it sadly declined significantly. Last year, residential sold is more than 1.5 billion square meters, but this year, I think it's declined to about 1.3 billion. So I put a question mark of that. Why is that the case? Does it mean that nobody is buying at all? Justify or account for the decline by explaining it from the weaker buying? It shouldn't be, because the fundamentals doesn't justify such a big and fast slowdown. Think about China's household leverage rate is lower compared with international peers. Urbanization rate in China still have room for improvement compared with other developed economies. So there is room for home purchase, right? It's divergent across different regions in the world. But why is this a significant decline for this year? I guess the reason behind this is just because the financing for developers have tightened for the loans to developers. So that's why the real estate sector is on a downward trajectory. Please refer to this chart. throughout our history. So for the spot available for purchase home or the homes under construction, so we call it by different names, for onshore and offshore, but we call it future to be available homes, which are the homes under the construction. Usually, they are sold at a weaker rate than the spot or immediately available homes. Why is the case? But this year is the opposite picture, because on the supply side, we don't have a lot of available for, and then people have this worrying sentiment as to available homes. So that's why the homes sold in terms of floor areas is declining. So is a new housing starts, but actually the price for home is still stable. Why? What's the rationale behind that? This time around, the volatility of the home cycle is because of the supply side. So, and then the government's policy actually is making some transitional policy. So we find that now the government will actually hold those developers accountable for delivering their property on time or something. So the government is trying to out gradually, incrementally, to assuage people's concerns over timely delivery of their paid homes. So I think it is a tone of our real estate development industry will be warming up, and it's going to be coming back on its feet. Second thing I want to mention is China's export. And China's export, since the outbreak of COVID-19, used to be very strong. Last year, it was up by 29%. So in US dollars, you find that it's up by 29%. And this year is up by 14% in the first half. So this was a significant growth, because prior to COVID-19, so there was 2 years of which export declined year on year. So, and then it entered into a territory of a low single-digit growth, but we have never seen such a more than double-digit growth. Why did it happen at the COVID-19? One thing, we effectively control COVID-19. Think about the industrial. So think about it, because we successfully control COVID-19, because that's why we do the production. Other countries cannot do it.
As you can see on this left-hand side chart, China has dark red, and the output has increased dramatically since the outbreak of the pandemic, as opposed to the negative columns as indicated, or which indicate the Eurozone situation. An increase to 2%, well, you shouldn't underestimate what the 2% represents. It's really hard for you to get 2% up in your proportion. And secondly, as I mentioned, that the Russian-Ukraine crisis have had a huge impact on Europe. And this chart shows you reliance on raw materials from Russia, and white sales represent huge reliance, and the red cells represent slight reliance. Mostly, North America rely very much on raw materials from Russia, and Canada. Canada has only one white. China and India, the two of us have little reliance on Russia, as opposed to Germany. Germany has all white sales, which is the same as Korea and Italy, and Japan has only one red cell. Well, by the way, Germany is a strong competitor of China, as well as Japan and South Korea. Both are strong competitors to China. So the crisis has had a huge impact on China's competitors, because exports from these countries are very expensive. That's how geopolitics has had a negative impact. And Eurozone, as a result, imported a lot from China, including PV, chemicals, and automobile. As I mentioned, that we have two more advantages. So we have two advantages. Firstly, we have very good control policies against COVID-19. Second, we had advantage as a result of the Russian-Ukraine crisis. And this slide showed you the global goods trade, how it accounted for the GDP. And the high point was recorded around 2008. But recently, another new high was reported. Why? Why is that the case? Why are we seeing a new high recently? Well, partly because of the COVID-19. So let's just take a look at this slide on this chart. So you see the United States has stopped doing anything regarding COVID-19 as well as other countries. What do these countries have in common? Well, their commonality is that the service trade accounts for a very small portion of total consumption. So you think that if the country government stopped doing anything regarding controlling COVID, then people would just go out and having fun, enjoying themselves. But actually, that's not the case. You see the service consumption, their proportion in the overall consumption hasn't recovered. Why? Because a lot of people, they're just risk-averse. Not everyone pursue risk. Some people, they do not want to get themselves sick. So even if you do not think about controlling COVID, they just do not go out. So this chart showed you a survey that was conducted last year in some Western countries. Some people just don't go out. So you see in countries that do not have stringent COVID control policies, their service consumption hasn't recovered. People just don't go loud. What is the result? The result is that their service consumption hasn't recovered to pre-pandemic level. If people don't spend on services, where do they spend? They spend on commodities or they spend on goods consumption. Am I making myself clear? If you have money, you don't spend on services, where do the money go? You just spend on purchase. For example, we are in a meeting. So before the pandemic, we had a lot of business trips. But now we don't do any business trips. So it's the case in Western countries. They use video conferences. Then where do the money go? People spend money on purchasing, say, electronics and other goods. So such a situation is a bonus for countries that are big exporters of goods, including electronics. For the next part, I'm going to talk about consumption. Ever since the COVID outbreak, how the COVID has affected China's GDP. So import and export, they contribute more to China's GDP, whereas capital formation and final consumption, they dropped by a large margin. Well, final consumption dropped the most, followed by capital formation. Why? What caused such a result? What has affected consumption? We do see consumption affected by the overall economy because we do see COVID situation improving day by day. So this chart showed you the days of the outbreak of COVID to the peak, as well as from the peak to the gradual recovery from COVID, as well as the number of people affected. Everything are on a downward trend. So the COVID just has a relatively stable impact on the economy. It doesn't exacerbate. Things are not getting worse. That's about consumption. Let's take a look at the consumption again and how it relates to the COVID. We do see a divergence ever since the second half of last year. That's why I'm presenting this chart here. The point is that the COVID or anti-COVID policies, they just have a flat impact on the consumption instead of making consumption worse. Then why? What accounts for the current weak consumption level? The chart was taken from a survey by Southwestern Finance University of China. They investigated why people didn't spend this year. Firstly, the red column represent actual decrease of their employment and salary, and the one or the brown column in the middle represent the impact of COVID. So what did the government do? What has the government done to boost consumption? As you can see from some high-level government meetings, there are policy tools to stimulate consumption in order to offset the impact of as is indicated in the red column, in order to boost up people's consumption and in order to increase support for the disadvantaged group. So from the policy perspective, at the policy level, there are policy support to boost the economy. Another thing is about support for the automobile industry. This year, there have been strong support for the automobile industry, and we did our calculation. Such stimulus policies to the automobile industry can increase GDP by 0.4%. So real estate, export, and consumption, these are the three areas that I've just covered. What can the government do? There are three types of government policies. First type is monetary policy, and second is fiscal, and thirdly, macroprudential. Regarding monetary, the cutting back of the interest rate, and there have been strong fiscal policies as well, including cutting back on taxes and spending on infrastructure. As for the last category of policy support, at the macroprudential level, there have been a lot of targeted measures and adjustments with regard to the real estate industry. There have been a lot of policies to guarantee the delivery of houses to home buyers. That's why I'm saying that real estate is in the process of stabilizing and recovering. So on the policy front, there have been consistent policy stimulus supporting various industries. So for this year's infrastructure growth is expected to reach 12% as opposed to 0.5% in 2021 and about 3% in 2020. So this year, infrastructure is expected to grow by 12%, showing how the fiscal policies have been issued to support infrastructure. And next year, we expect that growth will be much higher than the situation this year. And in the second half of this year, we'll expect growth to be in the normal range. As for inflation will be relatively moderate, although in some months, inflation will go up or go beyond 3%, but on the whole, it will remain moderate. So as the economy recovers next year, inflation will be slightly higher, which is just normal as the economy picks up. So that's the situation for China. In the short to medium run, the Chinese economy is going to stabilize and trend up. So much from me. So key takeaways: uncertainties on the part of the United States and Europe, and China is in the era of accelerated innovation. In the short to medium run, we will continue to see multiple government policy support on multiple fronts. So as a result, China's economy is in the process of stabilizing and trending up, and next year we'll expect to see the economy much better than the situation this year, albeit the inflation will remain in a moderate level. Thank you very much. So much from me.